Insurance companies have had access to the Federal Home Loan Bank since the system's inception, and borrowing in recent years has trended upwards. Here to discuss a new report on the subject is Kaitlin Piasecki, Industry Research Analyst, and Jason Hopper, Associate Director, both of AM Best Industry Research and Analytics area. And Jason, can any insurer access the Federal Home Loan Bank? How does that dynamic work?
Hi, John. Thanks. So there are some criteria that insurers do need to meet in order to be able to take advantage from the Federal Home Loan Bank. One of them is to meet a minimum threshold for RMBS holdings. Another one is to purchase FHLB stock. And thirdly, to be financially sound. There are certain financial requirements that need to be met. Now, in order to get advances, they do need to be collateralized by insurers. There are various metrics for each Federal Home Loan Bank that need to be met, but typically collateral needs to be single A or above rated, and it needs to be housing related as well. Some examples would be like treasuries, MBS, or CMBS. On the other hand, things like corporate bonds, private debt, and equity is not accepted as collateral.
Kaitlin, borrowing increased in 2022. Was that across the entire industry, and what was driving that?
So that was mainly across the life and annuity segment. And the reason for that is these companies are able to borrow from the FHLB at lower rates when compared to other institutions. And then the life and annuity companies are able to take that money and make spread plays. You'll also notice, though, in 2020, there was a slight uptick in P&C borrowing. And the reason for that is because the P&C companies were looking for an extra liquidity cushion to guard themselves against the uncertainty of the pandemic.
Do the industry segments' reasons for borrowing differ?
So to piggyback off of what I just said, life and annuity segment, those companies are typically going to be using their borrowings for spread and yield enhancement, whereas PC and health companies are typically going to use their borrowings for working capital, operations, and liquidity needs.
Jason, with the increased borrowing, is there room for more borrowing if needed?
Sure. So I guess just a quick context of the landscape. About 20 to 25% of life annuity companies have access to borrowings, so not a significant amount of the industry. And on the PC and the health side, it's less than 10% for each of those segments. So when looking at companies that are members and do have capacity for borrowing, roughly 60 to 65% of PC and health companies have not tapped any borrowing, so they have full available capacity. On the life side, as Kaitlin has noted, with the increase in borrowing for yields and spread plays in the rising interest rate environment, roughly 25 to 30% of life companies have not tapped any borrowing yet. So less than the PC, but there is room for additional capacity if needed.
Thanks, Jason. Kaitlin.
Thanks, John.
Thanks, John.
That was Kaitlin Piasecki, Industry Research Analyst, and Jason Hopper, Associate Director, both of AM Best Industry Research and Analytics area. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.